Hi, this is Alex here from Pro Trading Edge. So I wanted to do a quick review for the price prediction that I did last week before the high impact news. So this was the prediction here. I was looking for price to go up, take at least the buy side liquidity here, and maybe also go into this daily fair value gap here, trade into this high or trade above this high. So it didn't have to do that. I said this in the previous video that it doesn't have to do this, but it has to take at least this buy side liquidity before I'm going to take a trade going down. So in here, just as a reminder, the one with red, it was price consolidating, going up. So I was mentioning this, that it doesn't have to go here. It can just go above here and that is going to be okay. So this is exactly what it did. And after that, just going down towards the sell side liquidity here. And this is exactly what it did here, only that it took a little more time. And when price action is time to do something, it's going to do those profiles of trading down, consolidating, retracing, trading down again, and so on. So this is distribution, consolidation, manipulation, distribution. So those are patterns that I teach in my Smart Money Concept course on Udemy. And you'll find the link below this video if you want to get that course. That's affordable education because it's very, very cheap. And the second prediction with blue was in fact what it actually happened. So I'm going to delete the red, even if they kind of look the same. Blue actually happened because when the high impact news came, price traded down and took out this low, as I was showing here. This was lower, but it doesn't matter. Cannot predict exactly how much is going to go below a low, but it went. This is what's important. So we are concentrating here at lows and highs. After that, traded up and it made this high here, and from here just consolidated overnight, and the next day started to go toward the sell side liquidity, as I was showing here. I know it was wishful thinking for me to have this happening in one day, but sometimes it does. It depends on how much volatility there is in the market in that moment. It depends on what period of where are we and what's the leading economic driver news. So until now it was CPI, but today I see that CPI, it's not that volatile that it used to be. So if you look back on the chart, you're going to see that all this year CPI was pretty volatile. So we're going to see if CPI is going to be the main economic news driver, or we are going back to NFP, because NFP used to be the one. And of course FOMC, it's always expected to be the biggest one, the interest rate decision. But here price went down. So I'm going to show you here the trade that I took after the news, of course. So I mention all the time that I'm not trading before the news. If I believe it's going to be high impact, or if I know it's going to be a volatile news like CPI or non-farm payroll, I'm not that worried about other red news, red folder news, high impact, which are considered high impact. So in here we had the price going up here. It took out the buy side liquidity. It worked here on the buy side liquidity, consolidated overnight. Asia trades up and then it does not take the low. It trades up again at London. So here for me, for this day, in the context of this day, it takes out the Asian high and after that sells off pretty aggressively. So this is impulsive price action and retraces up to the opening price line, which you see it right here. And I was thinking here if it's going to go up again and trade into this high and take out this high and touch the fair value gap. So I was concerned about that. So that's why I took profits. If you see the previous video, I'm showing this trade that I took here at London. Then at the news, I was thinking that I'm going to go in if it's going to trade up and then collapse down after the news. So if the news is going to go up, then after that create like a break in market structure. So an entry pattern I want to see after the news, but it didn't happen. So price at the news time, so price right before the news, it traded down here, and exactly at 8:30 after it took out this high. So that was the sign for me that probably is going to sell off, is going to go down. So I just wanted to see that and go in after that, because I'm not going to trade during the news. If you ever watched news live on a trading platform, you can see that spreads open up a lot, and of course news are unpredictable, so you never know what is going to happen, so you can get like an unnecessary loss for nothing. So at 8:30 I see the price aggressively trading down like that. It does not trade up at all, so this was a good sign that it's going to continue to go down. If the price got here, it means that it's going down towards the sell side liquidity. So all I wanted to see was a retracement. So I have here the break in market structure, so this is how I do this kind of stuff. I want the price to trade up to the break in market structure, and you can see that it did it precisely. So this high it's 608 and this low it's 607, so it's actually a pipette higher, which doesn't really matter. We can see it right here, but this one is very precise, and I like when it does that, because it means that it's in a hurry to, even if it wouldn't touch the line, it would get just here. Another thing that I have here, it's this small order block or sell range. So I'm looking at this because see here in this price section there is no fair value gap, there is no imbalance. If I would have a fair value gap here, I will also note that and expect maybe the price to trade into that, but there is none of that here. We only have here the range structure break or the breaker, so again price also automatically touches that. If there will be a fair value gap, I would like to see that trading in the middle of the breaker maybe, or something like that. But because the price action it's actually balanced here, there is no reason for the price to go there. We have here imbalanced price action, so price going up, it's looking for that. But to avoid any issues here that I'm not going to get an entry or something like that, I just measure this price leg from here to here, and I want to go in above 50%. So if I see the 50% here, price goes above the 50%, I can go in here, but above here it was a better overlay of turning points than here. So I just waited in a little more. Like I could just miss this trade, and that's okay, because I had a good week trading, so I can miss this trade. But also if this idea works, I'm going to get a better entry. Also because I was thinking to go out, because it's high impact news, I was thinking to go out faster on this trade and just leave a runner to go overnight, and I'm going to show you immediately why. So in here, when price touched the red level 62%, that's when I went in, and because there is no near side low where I can just take profits, so the lows are pretty far away in this moment, I just took out 70% of the trade here at the turning point when it went up like that. So when I see it, you see how quickly it goes back here. So this was the 70% of the trade right here, and I left a runner. And for the runner, I left the stop loss right above this swing here where I've been entering. So it was just very slightly negative loss here it would be, but that's nothing, that's not a problem. That's covered by the 70% that I took here and still in profits. So in here, if I look at the 4-hour chart, so this would be the 4-hour range, you see, from here to here. So I put the fib from here to here. This is a 4-hour fair value gap. Okay, so if I go back on the 5 minutes chart here, I was looking at this, the 4-hour fair value gap and the 50% level on the 4-hour range. So I was thinking that price is going to want to touch this and maybe also trade inside the fair value gap, so that would take my runner out. So I just left it there. But then when I've seen that at London it does not do that, and we also have this. This is the 1-hour chart, so I'm going to delete this 4-hour fair value gap. This is the 1-hour chart, and the 1-hour range, it actually starts here, where is this swing high, because we also have a sell range here that actually starts this sell, a 1-hour order block. So if I put the fib here, I can see that 50% equilibrium has been touched on the 1-hour chart and also trades up into this old low as a turning point. So if you want to see turning points here, to see if this would be a valid turning point when it goes down. Yes, this is a valid turning point. There is no inefficiency in here. All price action here is efficient, but we do have price trading into premium prices above equilibrium. We have here a turning point. On the 1 hour chart, price is pretty efficient. I know on the 4 hour there is an inefficiency, but I usually like turning points when there are MTFIs. I discussed about that before, so it's a multi-time frame inefficiency. So I want to see that inefficiency on multiple time frames. And we also have the sell side liquidity here. So price is going to be very attracted to this, like a magnet, in the moment it finds a turning point. And here today, Monday, we see that it goes down, doesn't even touch this, and it bounces up. So that's not a problem. So today when I've seen this reaction here, I also closed the runner because it had multiple attempts to attack the sell side liquidity and it didn't. So one was Friday and then again here. So sometimes it's just creating like a equal low or like a double bottom. That's why you see double bottoms sometimes on the chart. This is how they happen. Price goes near and it just trades the other way. And that's okay for me because if I see the turning point like that, I assume something like that can happen, so I can just take my profits and close all the trades. I don't have to obsessively wait to trade into the sell side liquidity if it's so close to it and it just doesn't do it. That's usually a sign. And this is a sign that it can go up. It can go even up above here and maybe consolidate a little and come down again. And if we look on the daily chart, this is like an intermediate low, so it's not, this is the important one where we want the price to see going. So it's better to collect your profits and go forward with the analysis. So from an institutional point of view, the price action, it's basically telling you, look, I'm trading in this area, I'm waiting for you to collect your profits, because otherwise it would just trade aggressively up. So it's kind of showing like to the seasoned traders, to the interbank traders, to the institutional traders, look, I'm consolidating around here, but I'm not in a hurry to take out this low. So this would be a sign to just take your profits. And also I see a consolidation, manipulation, and maybe this is distribution on the buy side. So we are going to wait and see about that. So this one here finished the last week of trading. There was some trading here on Friday. And depending on what price is going to do, I'm going to look for trades this week also. If you look at the economic calendar, there is not much today and tomorrow for the dollar, but then from Wednesday we have pound, CPI, and dollar we have FOMC. So what I'm thinking is that it's going to treat this as some kind of support, try to induce some buying and then just aggressively go through it because of the dollar. So probably the dollar, let's see what the dollar does. So the dollar is consolidating here in this inefficiency. So probably the dollar is going to break this high Wednesday at FOMC. So we are going to see about that. But we are going to see, we need some more data before I'm becoming more and more sure about this scenario. So I hope you find this helpful and see you in a future video.